Hello everyone, Ashanti Titus here with Profit Mode, here to be your resource for bookkeeping and tax needs. Today we're going to talk about standard deductions versus itemized. So it's very simple and straightforward. A lot of times itemized deduction election is used for individuals in a higher tax bracket. This is due to the fact that if you haven't purchased a house within the last 3 years, and if you haven't donated a hefty amount to an IRS approved charity, or you haven't had a huge medical out-of-pocket expenses, the itemized deduction probably is not for you. This is due to the fact that you want to choose the higher of the two. Now, on the other side, the standard deduction it's very easy. It is set by the IRS each and every year, so it just depends on your marital status that you're going to be using for that year. So, for example, for 2019, single individuals have a standard deduction of $12,200, and married people have a standard deduction of $24,400. And if you are the head of household, if you're electing that, it is $18,350. So, with itemized, you're going to have to keep up with a lot of different things and calculate a lot of different items, and thus calling it, that's why it's the itemized deductions, and add all those together. So the total of your itemized deductions versus the standard deduction set by the government is going to determine, which one's higher, and that's what you're going to use to offset your gross income for that year. So that is something to consider. And when it comes to itemized deductions, there are a lot of caps on things, and people don't realize that you can't take 100% of your medical when you itemize. You only are going to be able to take, it's actually a couple of steps that you have to do. So first and foremost, if you make $100,000, you can, for any amount, you're going to multiply that times 7.5%. So anything over $7,500 is what you're going to get to deduct. So that means if you had a bill for $8,000 of out-of-pocket expenses for medical, you're only going to get to deduct $500, because $7,500 is the medical, that's the percentage, right? So that's the 7.5% of $100,000. You subtract your medical bill for $8,000 that year from the $7,500. That only leaves you with a $500 itemized line item, which is very minuscule. Okay. Now, when it comes to the mortgage interest, that's limited to $750,000. And so, since a lot of mortgages are heavy in the beginning with interest expense, this can be beneficial. But if if you purchase, most of the average American makes about $50,000, and a lot of people aren't just buying $750,000 houses right now. So, also, when it comes to charity, you can definitely get up to 60% of your adjusted gross income, but it has to be a charity organization that fits the IRS criteria. So if you don't check before you give your donation that it's an IRS approved entity, then you forfeit, being able to safely give to that charity and using it as a tax deduction. Also, there's something called the SALT deduction, which is pretty much the state and local tax deduction that has been capped to $10,000. So that means if you have property taxes for over $10,000, you deduct $10,000. Some people keep up, a very small portion of the population, they keep up with their local sales tax. So if you kept up with that throughout the year, that's still capped at $10,000. So ultimately, for individuals, in the mid to lower tax bracket, itemizing oftentimes isn't the best way to go. Itemizing primarily works if you if you gave, over 50%, 40% of your income to a charity that was approved by the IRS. And then also if you have huge medical bills, so if you're a healthy taxpayer, that's not going to help you much, which is a good thing. And also, the $10,000 has been capped this year. So a lot of people were upset by the fact that the state and local tax deduction was capped at $10,000. So hopefully that gives you a little bit more clarity in the itemized world versus the standard. So, if you're in a position where your income has significantly changed, you can definitely compare the two to see which one is more. But for your regular W-2 worker, oftentimes the standard deduction is the best way to go. So, I am here to help you with your bookkeeping and tax needs. You can visit us on the web at www.profit-mode.com, or that's www.profit-mode.com, or you can call or text me at 469-278-6239. That's 469-278-6239. This is Shanti Titus signing out. I want you to stay productive and stay prosperous. And until next time, guys, have a great one.